Yo, fit entrepreneurs, how you doing today? I got an episode today that will hopefully save you guys a lot of money that I unfortunately wasn't able to save over the past 9 years of entrepreneurship. And this has been my most expensive, my biggest expense over the past 9 years. It's called ignorance tax, guys. It's that tax that you pay for just not knowing your shit. Not knowing about the tax code, um, not knowing about credit card processing fees, not knowing how to streamline your business. I've paid ignorance tax in so many different ways, but today I'm going to share with you guys like three of those ways that you can implement super easy in your business today that will save you a lot of money if you're not already doing it. Um, and as a side note, I just finished a fucking brutal MMA session. I feel like recording podcasts, recording content, not typically something that I enjoy doing, that I get excited about. And most people are like that, right? You're putting yourself out there. Let me tell you, the best time to do your sales calls, to do your content creation, your speaking, whatever it is, you want to be feeling on top of the world. And you want to be doing things that's going to have you vibrating at a very high frequency and do those things on a daily basis. So for me, it's the cold tub, it is the meditation, it's the reading, it's the working out daily, multiple times a day. I mean, when you finish a session like what I just had, yes, you're going to be feeling on top of the world. I just did that shit. So this podcast is going to be easy. All right, let's save some money. All right, so guys, for the past 8 years, 8.5 years now, I've owned my own gym, Troy City Fitness. There have been multiple ways that I could have been saving money over these years, but I just didn't know. And what's worse about it is I remember literally a couple of years ago asking my accountant, we had to sit down and I'm like, hey, are there any ways that I can save money? Because a couple of years ago, I started making more, I paid off all my debts, and the money started rolling in. I'm making money like a normal person finally, and it's all going straight to the IRS. And that's terrible. That's a terrible feeling for you to finally be making money just for it to go out the other door, right? So I sat him down and I'm like, hey, look, I've paid so much money in taxes this year. Like, there's got to be something I can be doing, right? You hear about the Grant Cardones and all these other Elon Musk paying zero taxes. Like, how is that possible? What are these super rich guys doing that we are not doing? And I would argue to say that the IRS, the government, is strongly supported by like the middle class, right? Because sometimes we don't know about all these different loopholes that we can utilize. Meanwhile, there are billionaires that are literally paying $0 in taxes every year. And my accountant at the time told me, hey man, I pray that you pay $1 million in taxes in the next couple of years. That means you're making more money, you're more profitable. That is a good thing. Okay. No, there's nothing that we can do. We're doing it all. So I just took that and I rode with it for another couple of years until finally a few months ago, I did my own due diligence. And this is what you have to do, guys. Don't trust anybody in business, especially when it comes to your own money and one of your largest expenses, which is your taxes. You have to make sure your taxes are buttoned up real tight. You're saving money in every single possible way, because it's a huge expense, right? We're paying anywhere from like 30 to 40% out of our yearly profit sometimes. So I started doing my own research and I discovered multiple things that I could be doing. Some of those things are what I'm going to talk to you about today: the Augusta Rule, the filing of an S Corp, also how to file your payroll taxes correctly. And if I did this stuff 9 years ago, like how I should have, would have ended up saving myself almost $200,000 in taxes since I started my business. So we are going to add that all up and just call it ignorance tax for today's podcast. All right, so let's get into it. You guys want to start saving some money, take some notes on what I'm about to share with you today. So the very first thing that I wanted to implement is something so easy anybody could do it as long as you have a business, you have an LLC, and you have at least one employee. It's called the Augusta Rule. Now, this rule, it was created because a bunch of rich people always get together in Augusta every year for a big golf tournament, and they're renting out these houses. And it could be technically called like a business meeting, right, for your employees. So they ended up coining the term Augusta Rule off of that specific event. And what it is, it's basically your ability as a business owner to be able to rent your own personal residence out to your business at a standard fee. And then all the money that you collect on your personal income from your business for renting your personal house out, you don't have to pay income tax on that. All right. So you're saving in a couple of ways. Now, the way that you're going to come up with these reasonable fees, like, all right, how much can I really reasonably rent my house out for a day? Can I rent my house out to my business, Troy City Fitness, to host a team meeting for $5,000 for a few hours? That might be a little bit of a stretch, right? But there is a website called peerspace.com. I'll put it in the notes for you guys that you can check out. And it is going to give you many different locations in your geographical area that you could check out to give you an idea of how much it would cost if you were going to rent out a similar space to host this team meeting. So for me, I needed a place that would host at least 10 people. That's the size of our staff. And, I needed some desks, some chairs, some projector screen. I don't know if you guys could imagine like hosting a team meeting at a gym. It is not the vibe. There's music blaring, there's members in and out, there's blenders going off. So for us, it's actually super valuable for me to be able to have these meetings at my house because the employees are having fun with it, kind of lets us bond as a team, and we have zero distractions, right? And we have all the resources that we need in front of us. We got the table, we got the projector, we have all of that stuff so we can have proper team meetings. So what I do is I go on peerspace.com, I see what's available in the area, and for my area, it looks like roughly about $200 to $300 per hour is what the going rate is to rent a space out to host these meetings. So all I do is simply create a contract, and you can find these online for free. I create a simple contract that says Troy City Fitness is going to be renting space out from Andre Kazarian for 8 hours on this day. All right. And then I host that 8-hour meeting. I go through my whole team meeting. I have all the notes to back it up, just in case if the IRS ever gets curious about it. We really do have these team meetings. And then that is a business expense, right? And I have to pay that money to myself to be able to host that meeting. So let's say if I'm paying $300 an hour and I'm doing 8 hours a day, that's $2,400 just to host that meeting. That's $2,400 going out of the pocket of Troy City Fitness into the pocket of Andre Kazarian. It is an expense for Troy City Fitness, which will bring down the taxable amount that I have to pay at the end of the year. And that money that's shifting over to me personally, to Andre Kazarian, I don't have to pay income tax on that. And that is the beauty, that is the loophole of the Augusta Rule. So how many days out of the year can you do this? You can run this meeting 14 days out of the year. So for us, $300 times 8 hours per day, that's $2,400 times 14 days. That is over $30,000 that I can put towards my losses as Troy City Fitness every single year, and $30,000 that I don't have to report income tax on my personal, since it is under the Augusta Rule. So if you guys are not doing this right now, super easy code that you can implement right away. Like if you're not doing this, I have no idea why. All right, and like I said, if you have even just one employee, that's your board member, that's who you're going to have the meetings with, and make sure they're productive meetings. You know, we're actually trying to get shit done during these meetings. This isn't just some tax loophole. But it's going to make a huge difference, guys. That's going to end up saving you a minimum of $6,000 to $8,000 a year when it's all said and done, right? Once we offset those losses on your income, on your profit and loss statement. All right, the next thing that I want you to do is switch to an S Corp. And this is like, you might be listening to this and be like, wow, I can't believe this idiot wasn't doing this before. But this is what my accountant neglected to tell me for years and years and years. So I'm paying an extra 15+% self-employment tax that I didn't have to be paying for the many years that I had an income above 50,000 a year. And let me stress that part. If you're not making at least 50,000 a year, it doesn't make sense to switch to an S Corp. There are other filing fees and things that are going to actually end up costing you more money than the money you would save by switching to S Corp if you are not over that $50,000 threshold. But if you are over that $50,000 threshold, then what you're going to end up doing is save about 15.3% self-employment tax on all of your income above $50,000. That's a lot of money. And it's a super easy thing for your accountant to do. All they have to do is just file you as an S Corp. It's that simple. All right, so let's do some really quick math here. Let's say you're making a good $200,000 a year. Now that 15.3%, you are going to have to pay on some sort of reasonable wage for yourself. So if you do switch to an S Corp, you have to pay yourself a reasonable wage, and you're going to be taking your income as a W-2 earner at this point. So let's say you pay yourself $50,000 out of that $200,000 profit. That leaves $150,000 in net profit after you pay yourself reasonable W-2 wage. Now, remember, when you switch to an S Corp, you're going to be saving 15.3% on every dollar of profit you pay yourself after that W-2 wage. So if we're paying ourselves $50,000, that leaves $150,000 in net profit. And if we multiply that by the 15.3% self-employment tax that you would have been paying if you were still labeled as an LLC, that will come out to $22,950. And that's close to about what I was paying for the past couple of years before I discovered that I should be filing as an S Corp. All right, really stupid bonehead mistake. And add that up over years and years. If you don't know about this, that is the ignorance tax that you are paying by not knowing that you should switch to an S Corp. Listen to me now. If you're making over $50,000 a year in your business, switch to an S Corp. Save yourself some money ASAP. So we got the Augusta rule. That saved us a few G's. We got the S Corp filing. That saved us a ton of money. The next thing that I wanted to utilize is a really good home office deduction. And there's a couple ways to do this. So most of your accountants, and keep in mind, guys, like not all accountants are created equal. Some of them are just there to do their job as well as they should. Maybe you're not paying them for advising. When you get to a certain point, you want to hire a tax advisor. You don't want to just have an accountant. They're going to do your accounting and file whatever you proactively ask them to. But when you get a tax advisor, they're going to be able to dig into your portfolio and see how can we leverage your assets, how can we leverage your expenses to just squeeze out as much of these tax dollars as possible so you don't have to pay as much at the end of the year. And the implementation of the accountable rule that I'm going to teach you guys right now, it's one of those methods where you can also, again, utilize your own home to deduct the most possible money from your home office. So if you are filed as an S Corp, this is something you can do. It's called the accountable rule. And when you do a regular home office deduction, all you get to deduct is $5 per square feet with a maximum deduction of $1,500 a year. So $1,500 a year, if we're taking roughly 30% of that, that's going to save you like $500 at the end of the year on your taxes. That's not getting me excited. That's probably not getting you excited, especially after I'm talking about saving $20,000, $30,000 with these other plans. So what we're going to do, we're going to use that accountable rule. And the way that you do this, you have to figure out exactly how much of your home is being used for business practices. So for me, I have pretty decent sized home office. I have a podcast room, which I'm using right now to record this. And then I have a content creation room where I do like a lot of my workouts and things like that that I use to build out my programs. So all that square footage, if we add that up and divide it by the total square footage of my entire home, that square footage, it comes out to about 16.9% of my total home square footage. Now, my house, everything included all in, I'm looking at about $4,000 a month in monthly expenses. So if we add that up by the end of the year, that's going to give me another $8,000 in losses to claim. And that's going to, 30% of that is going to be right around $2,500 at the end of the year I'm going to save. So that is 5 times larger than the original typical home office deduction of just a measly $500. So this is how, and it's all going to add up, right? Everybody has heard how the best entrepreneurs, they have multiple revenue streams. Well, guess what? The best entrepreneurs also have multiple saving streams within their tax filings. All right, I'm saving a little bit here, I'm saving a little bit there, and it's really going to add up to help you save some extra income by the end of the year. And by you claiming this type of home office, it's going to help you do something else as well. Now, the IRS, they don't typically allow you to deduct commuting hours, right? So if I work 30 minutes from my house, I got to drive to work every day, drive home. Those are commuting hours. Those are not deductible. However, if I'm driving from office to office, those are business travel miles, right? Those are business activity miles. So what we can do in this situation, since I am claiming a home office, and literally I do this every day. This is my morning routine. I get a cup of coffee. I spend a couple hours in my home office. I get some deep work done, uninterrupted, early in the morning, and then I head off to work. So no bullshit. It is business activities. I'm going from one office to another. Now these are not classified as commuting miles. These are business activity miles. So everything is completely deductible. My office is about 9 miles from my home. So that would be about 18 miles per day times 6 days a week times 52 weeks out of the year. That would give me 5,600 miles to be able to deduct. And at 65 cents per mile, that would save me roughly $3,600 just in miles. And that's not including any other type of business travel. That's not including any type of auto expenses. All of that stuff is going to be able to be deducted at the end of the year. So again, I got roughly $2,000 in extra home office savings. I got another $1,300 in mileage. This specific rule is going to save me right around $3,300 per year. And let's add that up over the course of 7-8 years that I've had my own home. All right, that's another $23,000 plus that I could have been saving. And then for the grand finale, this isn't really anything that you can implement. Just a word to the wise if you do end up switching accountants, because this is a huge mistake that I made, and I made this mistake just a couple months ago. All right, so even after being in business for 8+ years, you're still going to make mistakes, but that's okay because we're going to learn from them. And one of the best things that I could do is just share with you guys my mistakes, so hopefully you don't make the same ones that I made. Now, after listening to this, you might be thinking to yourself like, man, my account sucks ass. I got to switch accounts ASAP. So if that is you, if you're in that situation right now, definitely make the move. Don't waste time, but make sure you switch everything. All right, because I kind of got fucked in this scenario. When I switched my accountants, I had him take over my personal expense, my personal taxes, my business taxes. He took over my quarterly taxes. The one thing that I forgot was my unemployment, my payroll taxes, because they don't offer this service. My old account, they did payroll. My new account, they don't do it like that. And my payroll taxes, they got to be paid every single month. So what was happening is I'm writing my own checks, right? I'm deducting my federal tax, my state tax, my Social Security, my Medicare from all my employees' checks. And all of that money that I'm pulling out, I'm supposed to be paying back in. Previously, it was just done for me. I wasn't thinking about it. And then one day I get a letter in the mail saying that I owe right around $23,000 in back taxes for the past 5 months in 2024. So obviously I'm not expecting this. It's a huge shock to me. I was just super excited because I saved some money. I was like, I'm gonna put this money aside so I can use it for my next investment. And then bam, you get hit with that bill and it's like, fuck, I gotta completely drain out my savings again. So I don't want you guys to get hit with these type of surprises, because I'm fortunate enough where I had that money set aside and I could just pay that, right? But some people in entrepreneurship, you might be just making it. And if this was me like 3, 4 years ago, I would have been fucked. Like there's no way I'm just going to have $23,000 laying on the side for me to pay a surprise bill, right? And then let's not forget, like this shit, it doesn't come free. When you make mistakes, you got to pay for those mistakes. So I had $1,000 penalty from the IRS. And then I got to call my accountant and tell them what an idiot I am. Like, hey, I forgot to pay my payroll taxes. I need you guys to set me up, find someone to take care of this service for me. So they found someone for me, but that person is not going to take on my account until I reconcile all of my liabilities, everything I owe to the IRS. So now my current account, they got to clean up this entire mess. They charged me about $2,000 for that. So I got $2,000 that I had to pay my own accountant to clean up this mess, and then $1,000 penalty from the IRS plus the surprise $23,000 bill. So I guess really I was gonna pay that 23 grand regardless, but it did cost me $3,000 in ignorance tax by just not knowing the mistakes that I was making. I want you guys to be able to learn from these mistakes, man, because this literally, if we add it all up and we multiply over the course of the past 8.5 years I've been in business, I could have saved myself almost $200,000 in taxes. But instead, I paid those taxes unknowingly, and that's why we call it ignorance tax. I hope you guys learned something today. And if you do own your own business, get out there, implement that Augusta rule. If you're making above $50,000 a year, switch to an S corporation filing. And if you live in your own personal home, start claiming those office deductions. Then after that, you can claim commuting miles because you're going from office to office. Do all that stuff and you're going to save some extra money just by listening to this 10-minute podcast. So I hope that gave you guys some value. I'll see you in the next episode.